Hey world, it's Bean when it come back to another video. You see the rays coming through the top, you dig? That ain't 93 million miles from here, okay? But I digress. Family, I want to come back with this video, guys, because I want to make sure that we continue to emphasize on how important it is to make sure you build your wealth, not from just working for somebody, okay? Build your wealth, family, by saving your money, paying yourself first. Then putting yourself in a situation where you can invest in some of these different equities, some of these different commodities. And so today's video, family, is going to be, well, how do I invest in the stock market? Or how do I invest in real estate? Or how do I invest in commodities? First of all, family, remember I told you, the market was at 29,000 points like 5-6 months ago. It dropped to 18,000 points. And when I'm talking about the Dow Jones. And so if you're really interested in investing and learning how to make your money make money, you have to learn these terminologies, family. You have to know that the Dow Jones basically tracks the 30 top companies in America. That's what the Dow Jones is. It's only 30 of the top companies in America. And the reason why it's part of the Dow Jones, because they are the most profitable, the richest, the highest market capitalization companies, the Apples, the Netflix, the Facebook. Those are all part of the Dow Jones 30. And the reason why they follow or track the Dow Jones so extensively is because that's basically where most money is invested in these companies. Now you may ask, Coach, Bean, what is the S&P 500? The S&P 500, family, is 500 of the top companies in the stock market. And it's the Standard & Poor's market, the S&P 500. Okay? Now, the difference between the Dow Jones 30 and the S&P 500 is that there are companies that are part of the Dow Jones 30 that's also a part of the S&P 500. But there are a lot of companies that's part of the S&P 500 that's not a part of the Dow Jones. I mean, just look at it from the mathematical standpoint. It's only 30 companies in the Dow Jones. It's 500 companies in the S&P 500, right? So you have a plethora of options, right? And so what I want to talk about today, family, is introducing you to what they call index funds. And index funds are basically mutual funds where, like, say, if you got a 401k or 457, any type of retirement plan where it's actually tracking mutual funds like a 401k, that's basically all they're doing. They putting your money, every month that you contribute, they putting your money in a particular mutual fund that they project that's going to rise and give you a better rate of return quarterly and yearly. Now, if you don't know what companies that your mutual funds are tracking, or if you don't know that the money that you put in your 401k is tracking these particular companies, then you're just in the dark. You want to be conscious of where your money is going. And so that's why I think it's important to not only have a 401k or 457 or 43B. That's important to have for retirement purposes. But it's very, very important to know when you're supposed to be able to contribute to these funds and when you need to be able to pull off a little bit. Right now, I will pull off a little bit because the market is overvalued. And we're in the midst of a crash. And so a lot of people have already lost a lot of money. And so let me go back to what I was talking about when we talk about how the market, the Dow Jones, was at 29,000 points 6 months ago. It dropped to 18,000 points. Family, that's an 11,000 point difference. That's a lot of money people lost. And now it's back up to like 24,000 points. Well, we know that the 24,000 point is not real because we've been on lockdown for the last 3 or 4 months. And so we know it's not us that's going to push 18,000 points all the way up to 24,000 points. That's what? 6,000 points. That's a lot of money injected into the stock market. Well, we know that the U.S. Treasury and the Federal Reserve did that. So we know it's phony money and it's a propped up economy. That's why I say it's important to know when you're supposed to get in and when you're supposed to get out. Well, wait until this market crashes completely. Well, Bean, how do I know that? There's something called market capitalization. Market capitalization to GDP. This is the metric that Warren Buffett has used for many, many decades to become rich and to stay profitable. Well, it's a metric that shows you that how is it that the GDP, which is the gross national product or the gross domestic product, how much the country produces in goods and services quarterly and annually. How is it that the GDP is a lot lower than the market capitalization of companies, meaning the value of the stock market is way more than the value of the goods and services that people are producing in this country, that tells you that something is awry. And so you know that it's pretty much propped up and eventually has to come back and correct itself to the metric necessary for this economy to be able to go up and down, up and down. When you know this, family, you can benefit tremendously. Okay. I told you before, like I said, for entertainment purposes only, but if you go back and look at a company that I call Novavax, I didn't call them Novavax, but this is a company that I introduced to the family months ago. Novavax was at $3.20. Novavax now is at $50 a share. Imagine if you'd invested 1,000 shares or 10,000 shares of your money into Novavax by purchasing those 1,000 shares. Well, if you purchased 1,000 shares right now, your money would have been worth $50,000 on a $3,000 investment. You see how this shit work, family? So let's always make sure that we stay conscious. Learn about the Dow Jones 30. Learn about the S&P 500. Save your money. Pay yourself first. Because when this market crash, we can look into what they call index funds. And index funds, family, will allow you to gain profits and returns on your investments by investing in the entire market. So why invest in Microsoft or Apple or GE when these companies may have some difficulties? No, invest in the entire market. And I'm going to get into that at a later date, family. So like I say, thank you for joining me. This whole pretty much food for thought session was to let you know, the family, there's going to be a time where you need to start investing your money in things that's going to bring your money more money. When you start thinking about money in reference to your return on your investments, percentages. Every year, inflation is almost 2%. If your money is sitting in the bank and you get only 0.003% or 0.001% or 0.05%, that's no money. That's pennies on your dollar. Look into high yield savings account, family. So when you're saving your money, you're not losing much, and then you have an opportunity to invest it in particular index funds, ETFs, other equities. Okay? Because this is it's not going to happen for us working for people. They've already showed you that at a drop of a dime, they can shut this country down, and you have 30 and 40 and 50 million people not working. But if you invest your money, take 2, 3, 4, 5 years of investing, discipline, sacrificing. When something like this happens again, you're sitting in the cut because you know how much money you have sitting in your portfolio, how much money you have coming to you in your dividends, and how much rate of return you're getting on your money that you've been investing a couple of years ago or wherever, and you know you're sitting pretty. Okay? So family, just want to come back with a little food for thought. Make sure you like, share, and subscribe. In the meantime, between time, may the Most High Inside bring you joy and being well as 5,000.